Folks, there's a lot of questions about dark pools, dark markets. Why is $16.5 billion worth of capital going into these dark pools daily? Well, in today's video, I'm going to take the curtain off. I'm going to give you a sneak peek, and I'm going to explain to you everything about dark markets, dark pools, and how to trade these strategies the right way and take advantage of institutional money that's going into these dark pools daily. The first question everybody asks about this topic, Roger, when it comes to the dark market, is there any hope that everyday traders will ever stand a chance against this? My answer, yes. First, I'll briefly update you on what's happening and what I've discovered. But if you absolutely can't wait, then click the button below now to learn how I can sneak you inside. Folks, I'm going to show you and give you a good idea, a good explanation of what dark pool trades are all about, how we spot them, how we go about finding them, how we go about trading them. I'm going to explain it all to you right now. All of this surrounded is volume. The full point of all of this is volume, okay? All right? The way we track these dark pool trades, these trades is with volume. And here's an issue, and here's a problem, here's something I usually don't talk about very much. I always tell traders to avoid volume because volume is very elusive and it's very dangerous. But if you know how to read volume the right way, you can find yourself on the right side of the market, and volume can tell you what institutional traders are looking at, okay? So let me back up and tell you how I discovered the strategy, how it all came about, give you some ideas. Before, what I did was this. I did a lot of tests with volume. I wanted to see if a breakout trade, for example, with a volume spike, was significant. So what I did was I would measure the volume on a breakout. So if this is the high and this is the low, I would measure the trading range, and then I would measure the volume spike, and then I would measure the amount of volume coming into the market on a volume spike. So for example, if a trade had 2 million average daily volume and now I was seeing 5 million, that was a volume spike. I tracked those, and what I found, and I did this about 3 years. I did every volume spike experiment possible. And guess what I found out? I found that there's no correlation between volume spikes and breakouts. But here's what I did find out. This is interesting. What I found out was that here's what happened. I used to put my stop loss level at a certain point. And I found out that when a certain volume spike happens, when volume rises to a specific volume and the price rises, I found 9 out of 10 times when the price kept coming back down, so let's say this is a $40 price level and the price went up to $50, so the price gained $10 after the volume spike. But what I found out 9 out of 10 times was the stock would come back to my stop loss level and then it would rise. So instead of looking for volume spikes, on breakouts, I started looking for volume spikes on pullbacks. All right? So again, every time I would look for a volume spike on a breakout, I couldn't find anything that I could confirm with a back testing engine. And if you guys follow me, you know that I test everything. I back test absolutely every strategy. I trade 20, 30, 40 years. And I couldn't find any consistency between volume spikes and breakouts. None. But when I started testing pullbacks, and again, I found this by accident. I found this because all of my breakouts would be stopped out and then the price would continue. So it went from 40 to 50, back to 40 or 39, 50, and then price would start coming out. So instead of focusing on the relationship between the volume spike and the breakout, the initial move, I started looking to see what would happen on a breakout after the fact. And I found out that if the volume spike rose to a certain level, and if price did something very specific here, this V pattern, that price tended to move back up, and I didn't have to go catching momentum breakouts. In other words, I didn't have to go and catch these powerful moves, because what happens to options when you have a breakout? They're overvalued. What happens to momentum? You're following price. You're trying to catch 50. You were looking at 40, but now it's 45, 46, 47, 48, 50, and you're still trying to catch it. That doesn't put you in any advantage. So here on a breakout pullback, you know exactly the price level where you're supposed to buy when it comes back. You can put a buy stop. You know your protective level. Volatility is lower. Lower volatility. So lower volatility means less risk. So when you're buying on a pullback, you have a lot less risk. So to summarize, I found a relationship between volume spikes and pullbacks instead of volume spikes and breakouts. And that allows me to buy based on the volume spike within X amount of days, and it allows me to get a cheaper price because I'm buying on a pullback. So in a nutshell, I'll just write here, I don't have any more paper on this sheet. So in a nutshell, we buy volume spikes followed by pullbacks. So we have a volume spike, we have an explosive move, and then we have a pullback, and that's where we enter. So what I'm going to teach you in this very simple tutorial is how to figure out how big of a volume spike you need in order to get a catalyst for this, in order to get the trade running for this, okay? And then I'm going to show you how to figure out where it pulls back, price pulls back. So you'll know the exact strength of the volume spike, and you'll have the pullback level, so you'll know exactly where to put low risk entry price, and it'll give you a profit target as well. So we're looking for a volume spike, which will trigger institutional buying. This triggers institutional buying. Then we wait for a pullback, and then we buy. And again, I'm going to show you all the levels. I'm going to give you all the price clues that you need. It's completely objective, which means you don't have to worry about, well, does Roger mean that, or does Roger mean that? Is that amount of volume enough? Is this pullback enough? It's completely objective. In other words, you can program this into a computer. It's real simple. It's very easy to follow, and it'll teach you everything you need to know about how to follow smart money, because that's what smart money buys. They buy and they cover their buys so institutions can see it, but retail traders cannot. I've exposed it. I made it really simple, and I've created a very low risk opportunity for you to trade these. Check this out. The video is very, very, very interesting. It's very informative, and it'll teach you how to trade volume spikes. Click the button below to learn exactly how to identify the most lucrative dark pool trades in the market. I've developed a precise 3-step process for finding these invisible yet explosive secret opportunities before they strike. If you want in, then click the link below now.